Hello and welcome to Ask the Property Experts. I'm Kura Chiota. Today we're going to be discussing innovative ways of raising hope finance with two experts who know all about it. I've got Justin Easthorpe, he's from Ooba, experts in home loan finance, as well as Herschel Jawitz from Jawitz Properties. Welcome to you both.
Thanks, Kira.
Right, now Ooba is a mortgage originator. Just explain to me what a mortgage originator does in this space.
So what we assist the home buyer to do is facilitate the home loan buying process. So we multiple submit applications to numerous banks to ensure that the home buyer receives the best possible deal from the bank at the best possible interest rate.
So you're a broker, you take my one application and you run around to 4 banks, 5 banks?
Up to 7 banks. So we multiple submit one application to all 7 banks, up to 7 banks, and present the home buyer with the best possible facility available to the client.
All right. Now, Herschel, if I want to buy a property, I can think of 4 ways of buying it.
Yeah.
I can buy it for cash.
Correct.
Happy parade. I'd love to have raided Dad's trust account to raise that kind of money, but not this time. I can buy it on installment sale. I can buy it on a rent to buy sort of scheme, or I can do the usual raise the mortgage finance. What innovations are there in the space that you're seeing on how to raise money to buy property?
Well, I think what we're seeing, and especially in that first-time buyer market where generally your first-time buyers may not have accumulated enough money for a deposit, taking into account transfer duties as well. There might be some affordability issues as well, and so I think what we're seeing is a lot of the innovations in that space. So for example, certainly significantly less than what we saw in the heyday of the residential market in sort of 2000 up to 2007, is the banks are starting to potentially look at 100% bonds, but in a very, very narrow space. The challenge there is that the interest rates that you pay on a 100% bond to compensate for the risk is extremely high. Yeah. What we're seeing potentially are buyers trying to accumulate deposits, to get more favorable rates and to be able to get into the market. So when you're talking about renting to buy either that property or not, there are many first-time buyers in the market who will rent a far cheaper property to allow them to accumulate some income. And we're starting to see some innovative products from the banks to assist those first-time buyers in addition to 100% bonds. So for example, I think one of the banks just announced the opportunity for friends or family, so to speak, to provide some collateral in lieu of a deposit to enable them to get into the market. Because otherwise, what tends to happen, and what we've seen, for example, in the UK, is that there are a whole generation of first-time buyers who are almost being excluded from the market, not because they can't afford the repayments, but because they don't have enough money to actually get into the market from a deposit point of view.
I hear you on that. Now, Justin, talk to me about the need for a deposit. A lot of South Africans have gone through their adult life and have bought properties on 100% finance. It's only post 2008 that that a lot of people are now saying, look, hey, why do I have to put money in? Why doesn't the bank just lend me the money at 100, 108%, maybe even 110%? Yes. Tell me the rationale behind the request for a deposit.
With the economic downturn and the recession in the market, and the banks feeling the pinch on trying to obtain the funds when they have to repossess the property, the banks need to mitigate their risk. And the only way that the banks are able to mitigate their risk is by asking or calling for a deposit prior to registering the bond. So the biggest reason as to why the banks are calling for a deposit is to purely mitigate the risk. And as Herschel said as well, is because the banks are mitigating their risk, they're able to offer a better rate on that particular facility as well. And also to Herschel's point is that 53% of our home loan applications currently are first-time home buyers. So a large portion of the buyers in that market are first-time home buyers and do better to obtain that deposit.
Now tell me, when it comes to the issue of putting in that deposit amount in an offer to purchase, I would imagine it's advantageous for, you've got a mandate to sell a property, I've walked in on your show day, I really want to get this house. The deals that used to be you're offering the property at 500,000 and I come in and I sign the offer at 500,000 and I'm dependent on getting a bond at 500,000. Tell me about the strategy of how a deposit makes my offer more attractive.
So the simple concept is skin in the game. Anytime you're putting skin in the game, being a deposit in the case of buying a house. It looks better to the seller because you're making a cash commitment. It looks better to the bank because potentially they're taking less risk, and it certainly looks better to the estate agent. And because in this market the risk of not obtaining 100% bond is still relatively high, generally what most estate agents will do is to say, if you're not going to put skin in the game, if you're not putting a deposit down and you're insisting on 100% bond, then until you've got that bond grant, we're going to recommend to the seller to continue to market their home, and in the event they receive a more favorable offer, not necessarily on price but on quality, so with a deposit and a lesser bond, you have the option to take the property, remove the 100% bond clause, or unfortunately you may lose the property to that second buyer. And that's why, unless you really can't afford it, we strongly recommend, and especially in this market where supply generally is short and demand is strong, that if you can find a deposit, if you can spend some time raising a deposit, it gives you a much better chance, a much better interest rate, and you look a better quality buyer.
The show is Ask the Experts. You're getting great advice here. We're going to see you on the other side of the break to make you do a winning mortgage application. See you on the side of this. Welcome back to Ask the Property Experts. We're still discussing the issue of innovations in raising home loan finance, and we've got the experts, Justin and Herschel. Now, when I put in my mortgage application, help me put my best foot forward, right? I'm assuming a clean credit record is a prerequisite. I'm assuming proof of income is a prerequisite. What else can I do to make my application get to? What sort of approval ratings are you currently seeing on mortgage applications?
So approval rate of 76% through origination. The first suggestion I would make is, before even looking for a house, to get pre-qualified.
Okay.
So we offer a service of pre-qualifying a client prior to them going into the market and looking for a property. And what we really look at there is if the client can afford the facility. So what we do call for when a client is buying a property is a salary slip, 3 months bank statements, get an understanding of what the client's contractual obligations are, as well as what the household expenses are. So we do a calculation of there's two calculations the banks use. The one is the bond repayment can't exceed 30% of one's gross monthly income.
Okay.
And the second calculation is net surplus income. So we take your net income, we take your household expenses, here's your contractual obligation, would give you a net figure, and your bond repayment can't exceed more than that net figure.
Okay. Herschel, do you have a surplus in your household?
Well, listen, it's difficult, but I think that, and especially now potentially we're in a rising interest rate environment, this issue of surplus net income has come in since the National Credit Act, and we've seen globally that our banking system and our home loan repossession or foreclosure rates were significantly lower than what we saw in Europe and certainly in the US. So it is a little more difficult, but I think from the long-term sustainability of the residential property market, the banking system, and the trauma of being overextended and losing your home, I think that the criteria that we have in place now are prudent, necessary, and make for a sustainable market.
Right. Now, the huge frustration of a lot of people are the self-employed.
Yes.
The self-employed say, look, I had a job and I earned 20,000 a month. I've gone freelance or X, Y, and Z, and I now make 30, 40,000 a month on a good month, but there are swings and roundabouts. Some months they make it, some months they don't make it. How do we present the self-employed application to raise finance through your platform?
So one of our biggest frustrations is that many of the self-employed applicants that come to us don't have their documentation in order. The first thing we need to call for or ask for a self-employed individual are financial statements. And in many cases, your self-employed individuals don't have their financials in order. So even though they have a good month, one bad month, we look at an annual view and also 3 years consecutive view of a self-employed as well. So we're analysing the sustainability of the business, the sustainability of the business being able to pay the directors, members, sole proprietors salaries, and in turn then being able to sustain the bond repayment. So the biggest issue we have is having our self-employed applicants' financial statements up to date when we're submitting the application.
And when the application comes through, so I'm Kura Chiwata Private Limited.
Yes.
Do you look at the Private Limited, or do you look at me as a director drawing drawings or salary? How do you look at those two elements to it?
It's twofold. We look at the company to make sure that they can sustain your salary,
okay,
and then we look at you and ensure that once you've drawn your salary, you're able to sustain the facility as well after drawing your salary. There's a number of ways we also assess that you may not necessarily take out the amount that you need for the facility, but then we go and we look at what the net profit is on the business and determine affordability based on a number of factors, what your drawings are, what your ability to draw from the company is as well. And we also look at tax returns.
Now, we were chatting off air, and you were saying that 53% of new applications coming through your desk are new first-time home buyers. Is this a high over time, or is it a new trend? Why would you say that? Why would it be that half of your buyers are first-time homeowners?
We've noticed this trend the last 12 months. So it's not a recent trend. We're seeing more and more people coming into first-time home buyers coming into the property market. So it's certainly not a recent trend. It's been tracking between 50 and 50%.
Why would you think it is?
I think there's just young blood coming in, and in particular in Joburg, young blood coming in, wanting to move out of home earlier, wanting to get started earlier in life as well. So, you know, in particular Joburg, your sectional title units, your smaller bachelor pad kind of places are what your buyers are looking for.
Typically, Herschel, on an offer to purchase, what sort of deposit are you seeing more often than not put in? Are people putting 10%, 5% down? What are you seeing?
Generally, we're seeing about 10%, and that's now become a norm. We're also pushing our clients hard for 10%, and very often, if you push your client hard enough, they'll find the 10%. You know, and especially first-time buyers thinking, well, let me see what I can maximise from the bank, and if there's a shortfall, I'll put in. We try to educate those buyers to say the more you put in, the more likely you'll get a bond. And if you do the interest rate calc on what you're getting on a 100% bond versus a 10% deposit on R1 million bond, or even a 500,000 rand bond over 20 years, I mean, you're sort of pent-up demand coming into that market, because a lot of those people have been waiting on the wings and have been excluded from the market and are back in, and that's the way the market recovers.
And that's where we leave it. Expert opinion from our experts. Thank you for joining us for our discussion, Herschel and Justin, for their advice. If you've got a question that you want to send through to us, send it to Ask Property Experts at bdtv.co.za. From the team here at Ask the Property Expert, remember, no such thing as a stupid question. Thank you for watching. Bye-bye.